Hoffman, and you are watching a TheoTrade presentation. Quick risk disclosure, we're not financial advisors nor a broker dealer. Listen, I may trade live today. There's going to be a couple of examples where I'm probably going to fire off a few positions. I've decided over the years, I really like doing these sessions with the marketplace open. I know no more of this nighttime. I really like doing it with the markets open, much more interactive, and do like firing off a couple positions throughout the course of this. Next, copyright disclaimer. This is ours. This is not yours. Listen, if you need to get a hold of myself, and I always mention this right up front in any session that I'll ever do, you ever need to get a hold of me after today, please just shoot us an email, support@theotrade.com. We use a general inbox. And what that means is, well, you go to support@theotrade.com. That goes to all of us, but all you have to do is put Don in the heading, and then it goes directly to me. So support@theotrade.com. Again, we have an office in Scottsdale, Arizona. Just the other day, somebody sent me an email. They're like, hey, so are you in the office in Scottsdale? And I go, no. It's actually now, none of us have been to the office in Scottsdale, Arizona since February of 2020. I mean, since like late February. We had a pretty good sized meeting in the office, and we have disbanded to Zoom ever since that. So with that, you can contact us. We still have people in Arizona, got a couple people out here in the U.S. Virgin Islands, few down in Florida, a couple scattered in Alabama, Chicago, California, Utah. We're spread everywhere right now. Everybody went and dislocated, of course, during this pandemic. With that, this is why you're here. So listen, anytime I do one of these webcasts, I want to have you walk away with something very definitive. So what we're going to talk about today is, it's a vast departure from anything I've covered on any recent sessions that I've done. Okay. And this is really where I not only got my start in terms of trading, but this is what I've done over the bulk of my career in trading, and that is to sell premium. And we're actually going to talk about selling premium in the current market environment. We're actually going to talk about where to find some edge in that. We're going to look at some very high probability trades and obviously reap the benefits of decay. We're also going to talk a little bit about some of the most viable products, the viable candidates, okay, and which products are a recipe for disaster. And again, you're also going to learn how to sell options premium in high volatility or low volatility without necessarily accumulating more risk. So I said it right up front. I said the O word. So we are going to talk a little bit about options today. It's okay if you have absolutely no experience, because if you have no experience, well, first of all, we're going to give you some experience, but I want you to be able to grasp big, broad strokes of logic, and that's what I'm going to impart upon you here in the next few minutes. But for those of you that do have some experience, I think you're actually going to gain quite a bit out of this today. So our gift to you, for those of you that are tuned in to this webcast, stay with me right until the end of the webcast. Today we are providing you the SPX expected move indicator. Okay, and that's my hand-drawn weekly expected moves. It's almost 4 years of hand-drawn expected moves. And it's literally, this is an indicator that has changed the way that we view markets. So it's a $500 value. I think you guys will really appreciate it if you've never seen it before. You know what? Throughout the course of this session, this is a screenshot here in the SPX. I'll tell you why this is such an important indicator. Okay, listen, throughout the course of this session today, I'm actually going to use live quotes. Okay, I am going to be referencing, both. This is the Thinkorswim trading application. I'll also bring up Tastyworks. I work extensively on both of those now. But the indicator that I was mentioning a moment ago, that's the SPX. And it's an expected move indicator. And some people are kind of thinking to themselves, I don't even trade the SPX. And that's fine. This is an indicator, though, that literally, okay, drives order flow to the entire marketplace. And no matter what you trade, like you might trade some Tesla, okay, you need to understand what this happens to be. And today is just a perfect day to explain it, because what you're looking at here on the indicator, this was the beginning of the week. This is actually where we left off the previous Friday. And what these lines are, the upper line and lower line, I'm drawing circles on them. Okay, the upper line is the upper expected move, lower line is lower expected move. But what is the expected move? It's what the option market depicts risk to be. So the options market right now says we can get up here to 3,900, or we can get down here, okay, to about 3,750. You go, okay, which way are we going to go? There's no directional bias to it. But this expected move, okay, can provide incredible insight, okay, to some of the moves that the marketplace is capable, all right, of seeing. And what I'm actually telling you is something I talk about incessantly on the weekend videos and some of the nightly videos we do. In this particular case, this marketplace has huge movement in the next 2.5 trading sessions, right? There's $70 plus of upward momentum, $70 of downward momentum left in this marketplace. I'll leave that discussion for another time, but this is an indicator that we are going to provide to you at the end of this session. And again, I just wanted to reiterate, this is something that will give you a link. Okay, stay with me right until the end of the webcast, and I'll actually give you the link to go grab the SPX expected move indicator. And again, you'll see this used just constantly in any of the sessions that I do. All right, onward and upward from there. A little bit of a housekeeping item. Listen, today I'm actually going to go into some pretty deep concepts. This is a skill set. Pay attention. I'm going to do some live trading, shut the door, turn off Skype, chat, whatever else might be distracting you, get rid of Facebook. No, seriously, get rid of Facebook, phones on silent mode, kick out the kids. All right, this is work. I mean, trading, this is worthwhile for you to spend some time. Because again, I'm going to go through some concepts that, as I said, I haven't talked about the sale of premium now, literally in years. And it's not just coming back, it's back. All right, it's back. Listen, you took the time to be here. This is important. So try to focus on being here. So here's a little bit about me. How many people here brand new have never attended a TheoTrade session before? Anybody here brand new? It's okay. Admitting it is the first step today. All right. Okay, a couple of people are brand new. My background. So in very large part, I watched order flow for 15 years, and it is in large part of why I'm here. But again, my name is Don Kaufman, and I grew up around traders. I literally did grow up around traders. It was, I had family that was in the trading business. I had an uncle that was a market maker. He owned a really famous, very successful trading firm in the 70s and 80s. It was called O'Connor and Associates. He sold O'Connor Associates to the Swiss bank in the early 90s for a few $1 billion. I mean, billions of dollars in the 90s was unheard of. So he sells the firm to the Swiss bank. In the late 90s, about 3 weeks out of college, I got involved in trading. And just a short time after I started trading in Chicago, I got an invitation to a startup brokerage firm. And that brokerage firm was called Thinkorswim. So I was lucky number employee 13 at Thinkorswim. And my job at Thinkorswim was to build the education division and helped, of course, build some of the Thinkorswim platform. So I spent the better part of a large career, literally from 2001 to about 2015 at both Thinkorswim and TD Ameritrade. So I was on the executive team at Thinkorswim in 2007 when we took the company public. I was there, obviously, when we were purchased by TD Ameritrade in 2009. I went on to actually run the education for, at the time, we had 7 million clients at TD Ameritrade. And I got to see what everybody else was doing. And when I say that, a large part of what you're going to learn in any session that I do, and I stress this all the time, okay? A large portion of what you're going to learn comes from having watched order flow. And that terminology kind of gets lost on a lot of people. Basically, what it means is we saw everything that retail clients did for, a decade and a half. We knew what worked, what didn't. We actually studied people's accounts, and that's what brokerage firms do. I mean, listen, if you run education for, at the time, the largest, okay, brokerage firm in the industry, and at the time had the largest option order flow in the industry. If you run the education division, how would you run it? I mean, you'd probably study what everybody did and then turn around and build an education division to actually teach people who was making money, who wasn't. And I'm telling you, what you learn here at TheoTrade comes from literally watching billions in others' mistakes, and obviously the knowledge of what works best specifically for retail traders. And that's part of my background. So in after TD Ameritrade purchased Thinkorswim, I spent 5 years. I spent from 2000 and roughly 10 to 2015 running education for TD Ameritrade. And everybody was asking, why did you leave? I had a 5-year lockup. So after the 5 years, I exited and we started TheoTrade. So that's a little background. And there's a bunch of people that work here as trading instructors at TheoTrade that are former from Thinkorswim, TD Ameritrade, and ran the education division along with me. So this is a couple of media appearances that I do from time to time. This is actually TD Ameritrade TV. I still do quite a bit of TD Ameritrade TV. I actually was on there on Monday. This is CNBC. I still do a couple CNBC hits from time to time, but this is the most memorable, obviously, because it's against Kevin O'Leary. All right. I was the short, he was the long. It worked. It was beautiful. Let's jump into it. Learning to sell options. So again, we're going to talk a little bit about options premium selling, right? And for those of you that have absolutely no experience trading options, again, don't freak out on me just yet, because we're going to explain this kind of in context. And for those of you, again, that do have experience, hang with me, because I want to make a couple of points that I think are always missed in this. So learning to sell options. So a lot of people have kind of heard through the grapevine that selling options is the way to make money. And I'm just kind of curious from my own, perspective, how many people have heard that? How many people have heard that, like through the grapevine, like selling options, selling options, selling options? Okay. Anybody? And it's interesting because a lot of people hear that. I say, be the house, be this, be that, right? But if you've actually experimented with selling options, then you know full well there's risk involved, okay? So the risk involved is the problem. You sell options. And again, I'm going to show you today. And, I decided in doing this presentation, I was going to kind of show you today what I term the full Monty. Like I'm just going to go all out. I'm going to show you a bunch of positions that I'm currently in, for better, for worse. Okay. I will show you trades that I'm in. Okay. I'm going to show you exactly why I am moving back to selling options premium, because it's getting good again. It's getting really good. And there's been a lot of years where selling options premium was tough, but it's becoming like, in vogue. And you have to understand that in terms of strategies and options, there are things that are like in favor and they go out of favor. And selling options premium, I grew up selling options premium, literally grew up selling options premium. And then the Fed stepped in after the financial crisis and they ruined it. But okay, as we've moved through time and the onset of COVID and volatility is just crazy right now, everybody is trading options these days. Yesterday was a quiet day in the market. 37 million option contracts traded. Seriously, 37 million option contracts. And I say everybody's trading options, they're all trading options. And it's us. It's retail clients. This isn't professionals. Okay. Listen, today's session is going to separate the myths, okay, from the real risks and the fact from the fiction in selling options premium. So again, don't panic. You can do this. You may know nothing about options, but that's okay for today's sessions. For starters, look again to grasp big concepts, okay, regarding probability and risk. So let's jump right into it. Listen, I call this the many facets of selling premium. One of the things I've been trading for a long time, a really long time. And in trading for a long time, it's kind of funny because terminology in this business seems pretty like commonplace, rudimentary to me. But the funny thing is when we talk about selling options premium, like selling premium, that phrase. Most people like don't get this. There's like 6, 7, or maybe even 8 ways to say selling premium. So I just wanted to cover that. And I just realized as I put this up, there's like 6 or 7. I only listed like 5 in here. Like, first of all, selling premium can be referred, like the vocabulary is interchangeable for, first of all, it's called selling premium. We okay with that one, right? But you can also call it credit spreads, right? You'll even hear a term called like iron condors. Well, credit spreads and iron condors are the same thing. Short call, okay, put spreads, delta neutral trading. Anybody ever heard that before? Most delta neutral trading is about selling premium. Some people call it selling naked. You know what? You could even call this, all right, covered calls. What do you think covered calls is? Covered calls is a form of premium selling. So what's interesting about this is a lot of people, they're like, I don't know if I really want it. You probably have already been involved in one of these in some way, shape, or form. Selling premium, again, is a very large genre of trading. Now, as I said, selling premium, it's come back, and it's come back in a really, really big way. And only, okay, recently we're just unloading premium right now, and it is good. Listen, selling premium, which is selling options, can be used in bullish, you can be bearish, okay? But a lot of this is generally considered market neutral. And I am actually going to cover a little bit of that. When I say market neutrality and so forth, you're like, what does that mean? Well, we'll cover that a little bit. Now, a lot of people, they're already asking really pertinent questions. And before I go any further, and we're going to talk a little bit about probability and profitability. Okay, before I go any further, I want you guys to know what I talk about here can be done inside of an IRA. You can do it in a retirement account. Okay, what can be done in a margin account. So pretty much any type of trading account, but I do not want you to worry about the amount, okay, of margin. Everybody worries about margin in selling premium. And I'm actually going to show you why. Like everybody they start to panic about this. They go, I only have a $10,000 account, or I only have a $5,000 account, or I only have a $2,000 account. Do not panic about margin, because there are new trading vehicles, like new products that you can trade that leveled the playing field, that you don't have to have a ton of money in your account. And I kind of wanted to start with that because I just saw somebody a moment ago ask a little bit about that, right? Yeah, covered puts. Yeah, sure. Right. So let's see. By the way, I like what somebody said. I know a bunch of people selling spreads for a living, and they seem to have a good life. I mean, again, it's selling premium is it's been around a long time. When I say it's coming back, though, it's coming back in a really big way right now because the volatility is just skyrocketed and it's not backing off. First, let's reference probability and profitability. So you're trading. It's not all about profitability. Your trading is actually based on probability. Okay. And, when I talk about probability, I'm going to give you kind of a fun one. So at least once a day here at TheoTrade, and TheoTrade, we've been around a while now. Okay. So we launched TheoTrade in 2016, and we left TD Ameritrade. I say we, a bunch of us left TD Ameritrade from the education division, and we started TheoTrade, and we launched it in 2016. And probably, okay, at minimum once a day, somebody asks us, okay, how often do you make money on trades? And I always get a kick out of that question. I seriously do. And people, they don't be offended by about what I'm about to say, okay? But people always ask, like, what is your probability, okay, in terms of the portfolios that you trade? So we have 6,000 people that are currently on TheoTrade. And TheoTrade, what is on TheoTrade? You get to see all of our trades, yada, yada. But we have 6,000 people on there. And either 6,000 people, they never ask this question. People email in every single day and they go, how often do you guys write? And I always get a kick out of that one because I go, Oh, I can be right 90% right now. Does that make a difference? Okay. You realize you could probably, and forgive me for saying this, you could literally train a great ape to be right 90% of the time. You can be right 90% of the time. It doesn't mean anything. You can be right 90% of the time. You're still going to lose money because probability alone does not make you profitable. Remember that always. Okay. Probability means nothing. When somebody says, all right, you like that one? The great ape, okay, could trade and be right 90% of the time. Probability means squat because you can still lose money. And I always want people to know that. Remember it, remember it. Listen, markets are a trade-off. Markets are always a series of trade-offs. Higher probability equals higher risk. You can be right 90% of the time and still lose money. So where can you find an edge? All right. That's what people are here for, right? Good. All right. Get ready because what I'm about to show you, very, very important. So here's one of the first major concepts I'm going to take you into, okay? The very first concept I want to take you into with this is simply this, okay? This is a distribution curve. Like I look at markets like this all the time, right? So this is what I kind of call discovering probability and premium selling tactics. So all this is some $50 stock. It's a $50 stock. Doesn't matter what stock it is. I don't care what stock it is. Okay. So it's a $50 stock. There's not too many $50 stocks. Now they're all like what? $500 stocks, $800 stocks, $3,000 stocks. They're like all out of reach. That's why everybody's trading options now. Everybody's trading options because you can't even trade stock because they're all trading for like a couple of grand. Like how many shares of Amazon you got? You go, I got 3. And you're like, that's a really big position. 3 shares of Amazon. It's like, it's $10,000. Anyway, in this, first of all, we do not own the stock. We have nothing to do with the stock. I'm going to go out there in this first example. I'm just going to throw, again, and as I say, kind of a quick example in here. I'm just going to go out there and I'm going to sell something. Okay. And I'm going to sell the 65 calls. Okay. I'm just going to sell them naked. Now, some people have no idea what an option is. It's okay. Ease up for a second because we're going to sell 65 calls. We're going to sell them what we term naked, which is a big margin trade, but don't worry about that. Okay, we'll come to all of this and we're going to sell them and we get to collect exactly, let's say, $1, right? That's it. This is my first example of this. Okay, so we're going to sell, and let's bring it down below. We're going to sell the 65 calls. Okay, and we're going to call it naked, and you're going to collect exactly a $1 credit. Okay, so now that you've done this trade, right, and that this is why, like somebody already said it too, this is exactly why you want to minimize your risk, because what can happen to me in here? First of all, options. Let's actually go back to some of the basics, some of the the construct of this. Even if you're experienced, you got to understand a few major concepts. First of all, 65 calls. What do the 65 calls give me the ability to do? Well, if you buy the 65 calls, you have the right to buy the stock at 65, right? So listen, in options, you could be a buyer or a seller. You can be a buyer. If you're a buyer of the 65 calls, you have the right to buy the stock at 65. You go, why would we want to buy the stock at 65? It's trading at 50. Okay, listen, I didn't say you had to buy the stock at 65, but you could have the right to buy the stock at 65. Maybe the option that we're looking at is out, 1 month in time. Maybe that's 1 month, could be 2 months, could be 3 months. But the point that I'm making is you buy the 65 calls. Maybe you buy the 65 calls because you think this stock is going up. You think this stock is going to be the next Tesla. It's the next plug. It's the next whatever. Clearly, all right, you could buy the 65 calls and you could make a boatload of money, because what if the stock went from 50 and shot all the way up here, to 100. If the stock goes from 50 to 100, you have the right to buy the stock at what? 65. Everybody else in the world has to pay 100. So what's 65 call worth when the stock's trading at 100? It's worth at least $35. Okay, but I'm not buying the 65 calls. no, no, no. I'm actually selling the 65 calls. Now, if you sell the 65 calls, if you sell the 65 calls, okay, first of all, how can you sell something you never owned? Don, I don't ever remember owning the 65 calls. No, no, no. You're opening the position by selling yourself into an obligation. What are you obligated to do? Give somebody your stock at 65. You go, but I don't have any stock. Exactly. You have no stock. All you're doing in there is selling naked. You're out there swinging in the breeze. It's just as bad as it sounds. So you sell the 65 calls and you collect $1. What happens if the stock goes from 50 to 100? You are in trouble, big trouble, people, because what? The stock actually goes up to 100. You're like, oh no, oh God, you're gonna lose $35. But don't worry, you collected $1 credit. All right, very unlikely, but I wanted to actually get into the notion of this, right? So if you take a look right now, and we were to go out, and again, I just want to bring this example up again, we were to sell, all right, the 65 calls, and you collect that dollar, first and foremost, all right? The collection of the dollar. This is a trade that is known as a credit, okay? There's no spread here. This is just purely a naked trade. And if you go out, all right, if you go out and you sell this and you sell it naked, again, high risk stuff. But what might you believe the probability in this trade is? The first thing we have to hammer into you isn't about minimizing risk. Let's not worry about your risk yet. And I'm serious about that. Minimizing risk, okay? We're going to teach that in a minute. What we want to look at first, though, is probability, okay? What is the probability embedded in this trade? You guys take a shot at it, seriously. Like you're sitting at home, you're watching this, and I don't know, what is the probability in the trade? As I said a moment ago, you can actually teach a great ape to trade options. And that great ape could be right 90% of the time. That trade probably has about a 90% probability. 90% probability of what? Okay, the real phrase is of making 1 penny or more. That trade has about a 90% chance, literally, okay, of making a penny or more. Nobody wants to jump on that one, huh? 90%. What do you guys think? Do you think that's real? Seriously, do you think it's real? Okay, you think you could probably make about a 90% 90% on that one in terms of like the probability, right? Anybody? Anybody? Okay. So let's say it has a 90%. Okay. Does that make you money? Does it make you money? Being right 90% of the time, does it make you money? Right? And I'm just gonna delete a couple of these here because I really want to get into this. Right? So why bother doing the trade? Okay. Why bother doing this trade? Even if it does have as high as a 90% probability, right? About a 90% probability. I'll tell you what can this stock do? The stock could stay flat. If the stock stays flat, will you eventually get to keep your dollar? Yes. Okay, right? Everybody okay with this? Just making sure. Like, if the stock stays flat, you get to keep your dollar. Why? Because eventually the 65 calls give somebody the right to buy the stock at 65. But does anybody want to buy the stock at 65? Does anybody want to buy the stock at 65 when the stock right now is trading for what? 50. Nobody wants to buy the stock at 65 when it's trading at 50. So what happens to the dollar? You get to keep it. Okay. If the stock goes down, anywhere down, you get to keep your dollar. Even if the stock goes up, okay, and let's say the stock gets to 55, you're probably going to puke there. You're definitely going to start to panic at 60, right? But you still, even if that stock goes to 60, you get to keep your dollar. So how do you lose money? Well, when the stock actually jumps from 50 up to 70, if the stock jumps from 50 to 70, what are you going to do? You're going to take a hit. Okay, you're going to take a couple lumps in the head. That's all I want to get to you right now. Okay, what I want you to understand in this context, okay, is that you have the ability to go out, all right, and do this very high probability trade. That's when somebody emails me in, and they go, hey man, how often are you guys right? And I always joke with them. I go, I'm right 95% of the time, because I can take you into a trade right now on a live platform and be right 95% of the time. But I'm going to tell you right now, that is not what is going to make you money in this business. You have to figure out a way, okay, to control risk. Control risk. So what you will learn about premium selling, okay? It is absolutely and unequivocally the most important thing if you ever learn to sell options, and that's what we're doing here today. Risk control, risk control. That's why we actually call today's session selling premium and minimizing risk. You know, nobody ever wants to come to a session though that you're like, hey man, let's do a session called minimizing risk. That doesn't sound too exciting, but controlling risk is everything on here. Let's move on. And again, we will get to the controlling risk momentarily. Selling options equals positive time decay, okay? When you sell options, every day that passes sees the dwindling, okay, of options premium. I mean, options premium, there's like all these like different decay graphs. I'll show you one in a second, but like options, like I'm sinking, right? We can sell some option premium right now. I ain't got no problem with that. But as time passes, the options you sold decay exponentially, meaning the closer you get to expiration, the faster they're going to decay. So let's take a moment to review time decay. This is time decay. How exciting is that? Let's review. Okay, this is time decay. You know, the option kind of burns like slowly, 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 and all of a sudden, ah! Okay. So I have a question for you. Where do you want to sell options? You want to sell options right before they're going to expire? Or you want to sell options far out in time? Because there's so many myths about what works in this business. There are myth after myth after myth, right? This is options decay. Everybody's like, well, they burn closer to here, they burn closer to there. Well, let's back up for just a second, okay? Let's go right back to our $50 stock. Let's go back to our $50 stock, okay, and talk about selling options premium on our $50 stock. Except, let's actually do it live in the market. We're doing it live. Where's the market right now? So S&Ps are up 13, the NASDAQ is up 90. Let's go to a stock called Twitter. Love it or hate it. Yeah, I know. I wanted to bring up like the most controversial stock in the entire world right now. Come on, right? Actually, the only reason I really brought up Twitter, it was trading very close to about 50 bucks. And it's been a little volatile lately. They have done some things that may be questionable. Anyway, on Twitter, it's about a $50 product. And all I wanted to do in this case is I'm going to close up this. I'm going to go all the way out 65 days out. And look, I can sell an option for right around $1. So we're going to go ahead and close that up. So here I am. Okay, here I am. I'm all the way out 65 days. And this is where, again, a lot of people start to question, why? Why would you go out so far in time? Okay, listen, I just want to go out and collect $1. In fact, I don't even necessarily have to make the full dollar. Okay, I want to go out and sell something. Okay, but I want to sell something that is a kinder, gentler option. And you know what? 65 days out, plenty of time to be right, plenty of time to be wrong, plenty of time to laugh, plenty of time to cry. Okay. But I'll tell you what, I know for a fact I can make a lot of that dollar in just the next couple of weeks. And quite frankly, it's all I care about. And I want you to understand that it's all I care about. You know, people ask me all the time, so you go out there and you sell an option with 65 days, you're gonna have to sit there for 65 days? No way, man. I ain't sitting there for 65 days. Okay. What's a 65 call worth when there's only 37 days left? Huh? Anybody? Okay. Listen, I'm teaching this live. Okay. I'm teaching this live for a reason, because one of the biggest misconceptions of options, okay, is that you should sell options with very short dated time frames. Whoever is telling people this, okay, does not understand one of the primary aspects of options, okay? And one of the primary aspects of options is, yes, options absolutely decay faster the closer you get to expiration, right? They're slow to decay out here, slow to decay, slow to decay. And yeah, this is like that last 23 days, right? You're like, yeah, we're going for it. The only problem is the options that they're talking about that decay rapidly like this are what we term at the money options. Do you see me? Am I trading an at the money option? No, I'm trading an option that's super far out of the money. And guess what? Far out of the money options actually decay extraordinarily fast, okay, with a much longer time horizon. What you're looking at here, and again, I want to make this abundantly clear, okay? Here's an option trading for $1 with 65 days. If you want to know what this option is going to be worth when there's 37 days left, go look at the 37-day 65 call, because I almost promise you here, okay, that you can collect, look at this, there it is. You can collect almost 50%, okay, of the options premium holding that position for what? Huh? Not even 30 days. Okay, less than 30 days. So less than 30 days, you can already collect 50%. But I thought that options decay closer to expiration. Well, if half the premium is already gone, okay, and that's less than 30 days, all you have in the last 37 days is risk and crap. Okay. So again, one of the biggest misconceptions, people, they do not understand that the options that decay, and people always talk about the decay graphs. Look, people always talk about these decay graphs, right? They don't understand this decay graph is actually based, okay, on the at the money option. You're like, what's the at the money option? 50. If the stock is at 50, they're talking about the 50 call. They don't even know what they're talking about, okay? We're actually talking about going further out in what? Further out in time and further away from stock price, and actually helps you. Theta decay. Theta. What does theta mean? Theta describes the daily whittling down of an options premium. So I suggest you rethink how option decay works. And I wanted to start with some like $50 stock, and some $50 stock. You're like, holy crap, he makes a good point. Look, here it is. I mean, in all of its glory, if you want to know what something's going to be worth, look, that's $1 option. It's only going to be worth 50 cents. And from 65 days to 37 days, it's less than 30 days of decay. And then you would have to wait another 37 days to get the rest of that premium out. So do not dare tell me that options decay faster the closer you come to expiration, because there's plenty of great decay way out in time. And it's a softer, gentler option. And that's one of the first things, okay, that we're going to learn today. So the next thing we're going to talk about is discovering probability again and premium selling tactics. So here we go again. Now we're going to look at $100 product. In fact, you know what? Let's go out and let's do this live. We're not even going to look at a $100 product. When I say we're going to go live, we're actually going to go into the QQQ. Okay, why am I going into the QQQ? I need, let me make sure I'm in the right account. I need to build some premium selling inventory for one of my portfolios. Okay. And as such, okay, I am going to go out and I am going to add to that portfolio right now. And why right now? I don't know. Now's as good a time as any. Like, look, oh, this is up here. It's towards the high of the day. It's fine. I add very, very small amounts. So I'm going to go in here, okay, and I'm actually going to sell an option. Here, let's just pick an option in this case arbitrarily. I'm going to pick an option 65 days out because I just did an example where we were 65 days out. And I'm going to say arbitrarily, I'm trying to sell an option right now that's right around, okay, in this case, $1. Like I'm just keying into this. So the market here is $1.09, $1.12. I'm going to come in initially to $1.11. Okay, they're going to move this market to $1.11. I just wanted you guys to see that. Why they move the market to the $1.11? Because I'm the best offer right now. I am the best offer. I'm going to cancel, replace the order. Now I'm going to come in at $1.10. So if I come in at $1.10, they're either going to fill me instantaneously or they're going to move the market to $1.09, $1.10. Ready? Let's do it. They fill me instantaneously or move the market. Oh, filled. Okay, perfect. So I'm filled. Now, okay, anything else we want to do? Oh, sure. Let's go. Let's do it again. Let's go even further out in time. Let's go all the way out 77 days. So let's go 77 days out now. Okay. Let's show you the same exact thing 77 days out. Okay. And again, I'm going to go out. You know what? I'll pick another option arbitrarily. And here's a market of $1.06 at $1.14, $1.06 at $1.14. And I'm actually going to come in there and I'm going to try to finagle myself a $1.12 fill, confirm and send, fire at will. So they move the market to $1.12. So then I come in here and I cancel replace. Now I'm actually going to come in at 111. Work the orders, people. Look, we're 106, 111. Oh, I'm tempting fate. Now I'm going to come in here, cancel replace, and even work it at $1.10. Are they going to fill me? Okay. Nope, they moved the market to $1.10. Good, leave it alone. Okay, let's do it again. Let's go all the way out 93 days prior to expiration. We're 93 days out. You're like, a lot could happen between now and 93 days from now. Good. Then you get the point. Does it really matter? So we're going to come out here. This is the 365s. We are way out of the money now. Here, let's use these. Okay, like I say, let's use these. This is 89 cents at 93 cents. All right, I'm just going to come in here and I'm going to work this order. Look, if it's 89 cents at 93 cents, initially I'm going to work the order at 92 cents. They're going to move the market 89.92. You ready? Okay, so they're going to move that market to 92 cents. Perfect. I just want you to see how to route orders appropriately. Come in here, cancel replace. I'll come down to 91 cents. 91 cents, they'll probably move the market to me. Okay, either they fill me or they represent me. What that means is either they fill me instantaneously or they have to represent me on the screen, meaning that I am the best offer in the marketplace. I get to stand in front of everybody else. This is order routing 101. Take a look. You can actually see my account. You can see exactly what exchange I'm on, everything, right? So all I'm trying to do here, I'm building a little bit of inventory. One of them I filled, the other two I'm working. Work it! And I'm gonna work those orders. And we'll see if the NASDAQ moves up, just nominally, they will fill me, okay? Just nominally, I'm gonna fill me. So I like what somebody said. I don't ever, ever, ever sell naked calls. The risk is way too great. Who said anything about selling naked? Okay. The thing is, you can do this with credit spreads, but I told you, I'm going to give you the kind of the full Monty of this today. All right. So we're going to come in here and we are right now selling naked. Okay. So we're going to sell naked. And in doing so, everybody looks at this and they were like, man, that could be a lot of risk because what happens if this thing goes against us? You know, and again, you don't have to look at this as a $100 product. We were just a second ago trading a $316 product. I was out there selling the 365s, 365 calls. Let's say we do sell them naked. All you have to do is before we come up here, okay, is reduce risk. You know what the interesting thing about the marketplace is? And one of the most interesting things about the marketplace is, okay, if I ask somebody this question, and I'm deadly serious about this because again, I can tell by the questions coming in here. I can tell by the questions coming in, some experienced people in here, and that's okay. If you're brand new, sit tight, okay? Because you're really gonna learn a lot here, right? So one of the things I want to talk about, first of all, don't worry about margin. I told you, margin is such an easy thing to overcome, okay? Very easy to overcome. After 15 years in the brokerage business, okay, you learn to overcome that. So when you look at this, all right, I'm going to ask a question. I really want to know your answer. What's more dangerous? This is a $100, okay, stock. It's a $100 stock. Or I have even a better one, okay? This is the QQQ, which is what? It's the NASDAQ, okay? So this is the NASDAQ. And you know what? We'll make it what it is. It's a $316 product, okay? Would you rather sell puts, okay, or sell calls? What would you rather do? Sell puts or sell calls? Naked. If you had to, somebody says you have to sell naked, you got to do it. What would you rather do? Sell puts naked or sell calls naked? Anybody? This is actually like the coolest example ever. Okay, so I'm going to teach you from a market maker perspective, all right, where the fear lies. So what's the matter with selling calls? By the way, only two people in here thus far have actually said, okay, sell calls. Only two people. And everybody says less risk technically with puts. That is actually the biggest mistake you're ever going to make in your entire trading career. Selling puts has absolutely extraordinary amounts of risk versus selling calls. Selling calls is the easiest thing to mitigate risk. You go, what? That's not what I heard. Okay, really? The last time the market sold off, when markets sell off, what does volatility do? Volatility explodes. So if you went out here and you sold, let's actually do an example, because again, this presentation today, this ain't, this ain't instant coffee, instant tea. You're gonna learn something here today, right? Somebody goes out there and they sell 80 puts. The marketplace sells off fast and sells off down to 80 initially. You have to deal with what? You have to deal with, okay, stock price declining, and you have to deal with vol, which is volatility, okay? If the marketplace goes down, those 80 puts are going to explode in value. The market just sold off 20%. What's volatility going to do? Volatility is going to go through the roof. You will get killed and you will get margined out of your position, okay? Now, let's do the exact same thing, except this time you're going to sell 120 calls. So you go out there and sell 120 calls, and the market rallies. By the way, most of the time the market takes forever to get to 120. Oh yeah, but the only thing you have to deal with here, okay, is price. The only thing you have to deal with price. Volatility doesn't explode. In fact, vol does what? Contracts. Volatility typically contracts as the market actually goes up. So the only thing you have to deal with is price. So wouldn't it be easier to reduce risk for the upside move? Okay, we're not talking about Tesla. We're not talking about Tesla. We're just talking about right now, like the QQQ. We're talking about stuff even maybe like Twitter. But it's the biggest misnomer in the entire marketplace. Because again, I made markets, and I made markets for years. And when I made markets, we used to always laugh about this, and people go, selling puts is way better than selling calls. And I'm like, yeah, what world are you living in? Now you can sell on both sides of the marketplace, and I have no problem with that. But in the real world, okay, it is much better to sell calls naked than puts naked if somebody said you had to do it, because you can reduce risk all the time in the calls. Reducing risk in the middle of a crash is impossible. You could wake up and be down here, but it's less likely, less probable to wake up and be up here. Think about that for a second. Because again, I wanted to exploit some of the weaknesses in what people do. Okay. And you can hear me getting filled in the background. Okay. If you hear me getting filled in the background, because I'm doing it. I just sold. There you go. QQQ, position, 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 position. I just filled. So all the positions I just put on, look, we rallied by what, 10, 15 cents, filled at 91 cents, filled at $1.10. Okay. Filled over here at, again, filled down here at 92 cents. So we're good. We're all filled in the positions that I put on. So we'll see actually what happens. Well, could see in 30 days. Hey, by the way, what's this 93-day option worth? What's this 93-day option worth? Okay, when there's only, look at this, this is the 370 calls. What's it worth when there's 65 days left? Okay, go look at the 375 calls, 65 days left. 370 calls, check this out. 90 cents, they're only worth about 35 cents. So I can actually collect over 60% of the premium. Okay, I can collect 60% of the premium selling an option that's 93 days out in time. It's a party now. Okay, think about that for a second, because that's what's huge. Listen, why sell options so far out in time? Have you noticed in my example, I sold options, again, a few months in duration. Typically traders sell shorter dated options. Therein lies why you're tuning into this webcast. Okay, and why specific criteria is of such critical importance. That's what we actually do here at TheoTrade. Okay, see, where people get themselves in trouble in this business is there's a 90% probability, which is exactly what I just did. Okay, I went out, I gotta tell you, I went out and I intentionally put on trades. Let's scroll to the trade I put on. See this trade right here? Okay, that trade has over a 90% probability. How do I know? Just switch right here where it says volume, options, theoreticals, and Greeks, and go to probability OTM. That means probability out of the money. Look, that trade has a 92% chance, 92% chance of expiring out of the money. That's pretty good probability. What's the other trade have? Okay, oh, let's go here. Okay, scrolling. This one has a 92% probability. Huh? What's this one have? Okay. Oh, lo and behold, that one has a 94% probability. You asked a question earlier, and I said, like, hey, people always email me every single day. They go, how often are you right? And I love this. Here's my answer. 94% of the time. I am right 94% of the time. Okay. That doesn't make you profitable. Because what you have to learn in this business is that 90% probability and the 10% hammer. 90% sounds great, sounds really good at the cocktail party, but 10% of the time, the market will just rip your face off. When you trade high probability strategies and you're wrong, you get hammered. And the market is just evil enough. And anybody that's done this, knows what this phrase means, right? The market is evil. The market evil enough to allow you to make money 3, maybe 4, maybe even 5 times. And then you increase contract size. You go, I was a 1-lot trader, but I had a profitable trade. And then I was a 1-lot trader and had a profitable trade. So then I did 3 contracts, then I had a profitable trade. So then I did 10 contracts, and it waits for you. It's like, come on, come on, come on. So train wreck. Then your losses end up exceeding the gains of the previous 3, 4, maybe even 5 trades. Come on, people. For 15 years, I watched people's accounts. And that's what I put on the bottom over here. I know it's like I can see your account. Yeah, for the previous 15 years, I could see your account. I know exactly what people try to do. I'll give you a better one. Okay. I'll give you an even better one than that. I can fix it. I can fix it. I know I can fix it. And fix is a really dirty word, especially when doing high probability trades. Okay. 15 years in the brokerage business, I'm totally a cynic when it comes to fixing trades. Anytime you're trying to fix a trade, you're adding more risk into an already losing trade and racking up transaction costs. And some fixes may work, but the very notion of fixing a trade throws good capital after bad. Like, listen, yesterday's trash. You take a car, when a trade is broken, you take a car and you drive it off of a cliff and you bring it to a body shop. I got to tell you, people send me emails again all day long. They send me emails like, save me. Okay. I did a trade that had a 90% probability and it's gone horribly wrong. What am I going to do? You've already taken the car, you've driven it off a cliff, and now you're trying to bring it to a body shop. They're going to tell you the same thing. That's a nice piece of crap. The body shop ain't going to fix it. Okay. It's a piece of junk. Let it go. Do it right. You got to learn, okay, to correct good trades gone bad. Here's what you need to really learn. And this is why I want to really get into selling premium. Okay. The way that we sell premium effectively, first and foremost, okay, a few things I want to talk about here is one, okay, the sale of options. So the sale of options. People, that's easy. You just saw me do it a second ago. The sale of options is easy. Number 2, okay, let's face it. Margin. What are you going to do with margin? What are you going to do with margin? How are you going to handle margin? I need to know. What are you going to do with margin? You can't sell options naked. You're going to eat up your entire account. I don't think that for a second. Okay. I can show you a bunch of different ways to handle margin. You want to see something interesting? Okay. There are new products out that don't tie up margin. There's no day trading margin restrictions. You can go look at like the S&P options on futures. So we got to worry about the sale of options. We got to worry about margin. And you'll get to the third thing here. But before I go any further, now all of a sudden I'm talking about options on futures. Just hang with me for a second. I'm in the S&P options on futures because I want to show you something. Okay. Who cares? It's an option, isn't it? But look, if I go out here, this option on a future, and I want you to see when I hit confirm and send. Okay. When I hit confirm and send, this option only, it's going to tie up $6,500. You're like, that's still a lot of margin. This is the equivalency of 5 spider contracts. This is actually a fairly big trade, but it'll only tie up $6,000 of margin. You want to tie up less margin? Watch this. This is a micro option. Okay. This is a micro option. You're like, well, what's that? I've never seen those before. Oh, it's a micro option. They're new. Okay. Well, they're new as of about a year ago. They're new. Tell you what, that only ties up $500. And there's ways to mitigate your risk even beyond that. And by the way, there's no day trading margin rule. You can trade in and out of these 100 times if you want. It only ties up $500. So you don't ever tell me I can't do. Of course you can do it. Why can't you do it? Everybody can do it. And that's what I want to, again, that's what I really wanted to focus on over here, right? Is that you absolutely unequivocally, everybody can sell options. And then you're talking about like, I don't want to sell naked. I'm scared of naked. That's okay too. You don't necessarily have to sell naked, okay? Because number 3, and probably the most important aspect of this is this. It's how you are going to work, okay? Hedge, okay? The hedge, people. You got to worry about the sale of options, okay? That's easy. We can throw criteria at you. You got to worry about margin. That's easy. We can actually help you into which product is right for you, right? And you can even do this, again, in individual stocks, as long as you know how to take care of the margin. Number three, here's the hard part, the hedge. The hedge is about what, okay? Risk reduction. You got to learn about the risk reduction. Let me give you an example of what risk reduction means. Okay. You know what risk reduction means? For those of you that have ever sold puts, how many people throw your hand in the air if you've ever sold puts? Just say yes in the chat room. Okay. A bunch of people have their hands in the air. It's actually pretty fun. That's awesome. They can actually put their hands up in this thing. So people have sold puts naked. Here, I'm going to give you a quick example. And in this case, I'm going to do it in the spiders. So I'm going to give you a quick example in the spiders, and I'm going to give you a little bit about like what I kind of call the full Monty over here. So let's go over to the spiders. And all I'm going to do is make a point. Don't worry about capital. Don't worry about anything. The spiders are a $380 product. Okay, and you can see, listen, I've got positions all over the spiders. Spiders are a $380 product. And I am going to go out, okay, and I am going to, oh, let's just say I sold these puts and sold them naked, 316s or 315s, whatever. Okay, they have 90% probability. And the point that I want to make, okay, is this is again, this is a $380 product. It's the spiders. So the spiders are trading at 380. Okay. I'm going to go out and sell way out here. I am going to sell the what? 315 puts, okay? And I'm actually going to collect a $2.50 credit. Now, that's exactly, I said, that's a high risk trade because selling the puts, what happens if the market crashes? You tell me, what happens if the market crashes? You're toast. By the way, there is no pattern day trader. There is no pattern day trader. A lot of people are talking about pattern day trader. There's no pattern day trader. Okay. No pattern day trader. Okay. You go, wait, what? How is there no pattern day trader rule? There's no pattern day trader rule in futures. There isn't any. And that's the most important thing about options on futures. Futures are a different regulatory body. Remember, 15 years in the brokerage industry, I can get you by rules. Okay. We don't need no stinking rules. It's your money. Learn how to use it right. What's the risk if the market crashes? My risk is huge. If we go from 380, do you realize that after Corona, okay, that market got down into the low 200s? Could you imagine if we went from 380 and the marketplace got cut in half in a couple of days? You're dead. You sell the 315 puts, you are dead. How do you actually overcome this? Okay, risk reduction metric. How do you do a risk reduction? We could do something like a VIX vol spread. And you go, I don't even know what a VIX vol spread is. Exactly. Okay. So what a VIX vol spread is this. You went out here, okay, and you sold, all right? You sold those 315 puts and you sold them naked and the market comes crashing. If the market comes crashing, let me ask you something. What does the VIX do? What does the VIX do if the market crashes? Anybody? What does the VIX do? Okay, spikes. What does the VIX do? It spikes. So how do you reduce risk? Well, let's actually get down to it. Let's actually cruise over to the VIX. Now, for those of you who think this is like, complicated, it's not complicated. And in less than an hour, I've already shown you, all right, so you can sell premium. You can actually reduce your margin, right? Now I'm just showing you a little bit about the hedge. Let's go out and actually build a hedge. What's a hedge look like? Hey, look, I have a bunch of them on right now. Here's the hedge. Sell this, maybe buy this, okay? I turn around, buy one of these. Whoops, apologize for that. Okay, I'm a clicking fool. All right, so I sell that and I turn around and yeah, this will work. Buy one of these, sell one of these. I'm actually doing this. It says for a 5-cent debit, but let's make it even money. This would actually be done for like what I call even money. Even money basically means you're not paying anything, you're not losing anything. This actually gives me a hedge all the way to the end of March. You go, what do you mean it's a hedge? Well, I just bought a VIX spread. I bought a VIX spread. And what is a VIX spread? If the VIX gets above 40, okay, I'm going to be wildly profitable on this trade. This is a VIX hedge. And you go, what? Let's come over here and analyze the trade. Now I have a lot of trades on over here. So let's go single symbol. Let's actually go hide all my positions. I'm just going to look at the simulation. We're just looking at a simulated trade here, people. This trade makes absolutely nothing. If the VIX gets over 40, it'll explode in value. This is only one contract. Okay, one contract. If we get to 50 on the VIX, I'm going to make over $1,000. And you're worried about the sale of a put? Sale of a put is actually fairly easy to reduce risk on. You just have to know how to use the VIX product. Okay, and again, these are areas of the marketplace. You ever wonder who trades all these option contracts in the VIX? Look at this. There's hundreds of thousands of contracts. It's all professional firms doing exactly what I'm talking about. They're doing VIX volatility spreads. Okay. I didn't come up with that. That's something I actually learned in the market making side of the business. All you have to do, okay, is look to a product. You look to a product and you mitigate risk. Because if we do crash, which is a real threat, okay, but you don't want to pay anything for that hedge. I'm telling you that selling options premium is so very back, but you need to know how to do it correctly. And don't think, again, don't worry about the margin that comes with time. All right. Don't worry about, if we crash, we have a hedge for it. Okay. You say, what do we do? What do we do if the market actually rallies big? And we have a hedge for that too. It's called the back spread. All right. These are really straightforward strategies to be able to reduce your risk. That's what selling options premium about. That's what you actually learn, is not just, hey, anybody can go out and sell an option. Anybody can. Right now, you just saw me do it. I just sold some naked options, but you're also looking at part of my portfolio. Look, I have positions on in here, okay? And they're sizable and they're hedges, okay? That's risk reducing stuff, okay? To mitigate whatever I have exposure to. Listen, this is why I want to sell options premium. Produces positive theta decay. You can you can actually enhance existing positions. So somebody here that actually already owns stock, why wouldn't you sell options premium against the stocks that you're already in, long or short? Okay, provides an extraordinarily high probability of success. You never need to buy or sell the stock. Don't ever worry about getting stocks put to you. Okay, we'll circumnavigate that as well. You do not have to worry about buying or selling the stock. Getting assigned is easy, meaning that, when I say getting assigned is easy, getting assigned, when the assignment's coming, generally speaking, and you can circumnavigate it. And number 5, you can be wrong on market direction. And I think this is going to be the biggest one of this year. Okay. If you want to know my feelings of 2021, you're going to be wrong. Okay. This marketplace ain't going to be a straight, line to the upside over here. You're going to be wrong on market direction and still produce profitable trades. And I'm telling you, okay, when it comes to the sale of premium, you're going to need this in your life. Like, this is risk reducing stuff, right? Selling premium, potentially bringing really nice, consistent returns, but you're still minimizing your risk, right? If you like to learn how to sell premium and minimize risks the right way, so let's discuss criteria. So first and foremost, here are a few live trading examples. All I wanted to do is I wanted to show you, okay, just a glimpse of a few live examples, not even the hedges, but in this next live example, and don't panic, okay, I'm actually going to show you a trade I did on Tesla. And I was very comfortable doing this trade on Tesla. There's actually several trades on Tesla. And the reason I really wanted to show this as an example, okay, first of all, I had hedges on this trade. However, okay, it is a naked short call in Tesla. I did everything wrong. I sold naked options on Tesla, and the stock actually moved up humongous. Go look at this time frame. This is actually November 30th to what? Here, I'll even show you the full trade. Okay, so this is actually just a screenshot, exact time of the trade, right? November 30th, closed on December 4th. I actually sold the 950 call and I bought back. Look, sold it to open, bought it back to close. 83% return. Okay, 83% return. What did the stock do? Stock actually didn't do much of anything here. Anyway, I had a hedge on here just in case I was wrong, right? But I was feeling confident, so I did it again. Here's one where I held it for a full week. I went out on December 14th to what? December 21st. I did the same thing. I sold calls. And this is where everybody's like, what are you crazy? You sold calls naked on Tesla? Tesla's done nothing but go straight up. Okay, sold a 950 call. By the way, you just saw me do the 950 call earlier. Yeah, I was so enthused, I did it again. and I bought it back. Okay, I sold it for 425, bought it back for 42 cents. It's a 90% return. You know, how many contracts? Listen, you just want to do one contract, who cares? You know, 300-400 bucks that you can gain out of this. When you do 10 contracts, that's $4,000. It's making almost 4 grand on 10 contracts. But I just want you to see, you know, when something works in this business, look, this is the December 18th. When something works in this business, you do it again. And then if it works, you do it again and again and again, right? Let's do another one. That's another Tesla short call. Why? Because I'm just showing you. I have been dead wrong. By the way, is this one recent enough for you? Okay, dead wrong in here. But the volatility is so high. In Tesla, the volatility is so high, you could be dead wrong, you still make money. Here's another one again. I opened this on January 8th, closed it on January 11th. Again, I only want to show you really recent stuff, right? I sold a 1260 call. I bought back the 1260 call. There you go. 58% return, 58% return in a whopping what? 3-day window. Okay. What did I do for that? Absolutely nothing. Nothing. What else has been a big mover lately? I'll show you another one. Here's been a huge mover lately. Okay. Huge mover in bonds. Okay. In bonds, I actually sold a put. I shorted a put. And I did that yesterday and bought it back this morning. And look, I sold it for 14 ticks and bought it back for 6 ticks. That's a 57% return. The bonds barely moved. The bonds just barely moved. And I'll tell you what, I just filled another one of these. Okay, literally getting onto this session. So hold on a second. Hold everything. Let's go to my account statement. Okay, so I just sold these here. Here's the other trade. And I say, here's the other trade. Look, buy to close, buy to close. See, this one I actually just bought to close. And by the way, this is my account statement. Here it is, 94 fills in the last 50 days in this particular account. I have a lot of different accounts, but here's one there. Look, that's the 162 puts, the 162 puts. I sold this yesterday for 15 ticks, bought it back for 7 ticks. What is that? Okay, it's about a 53% return, but I didn't just do, okay, that one, all right? I also did the one next to it. So what did I make? You know, again, make a few $1,000s off of this. I was never in any danger. Okay. The bonds, what did the bonds do in the last, 2 days of trade? Here's the irony. Okay. The bonds were actually selling off big. I sold some puts. They rallied a little bit here and there. But again, neither here nor there. I didn't know anything. This isn't about direction. Okay. I don't know if this marketplace is going up or going down. And that's what's important over here. That's what you've got to see is you can generate returns. Okay. You're not going to have to be a genius in here. And this trade had hedges on it. Listen, what better time to learn a skill set that can last a lifetime? I mean, people, listen, whenever you can have time like this again, and most people are actually quarantined. Some people are still working, but the sale at premium can be really, really part-time. Like this is not going to be in front of the screen all day. If you're quarantined, right, emerge stronger, at least in great financial shape from it, right? But it's a great time to actually learn some of this stuff. Listen, what our members are saying, took a couple of snapshots of this, but here, this is from this summer, but I love this quote. You won't find a more supportive, more profitable room anywhere in the retail business. Okay. Here's another one from Ali. Don helped me pay for a year of TheoTrade subscription with the QQQ. I mean, listen, okay, you don't have a lot of time. Again, it's not a huge issue. The trades that I showed today, right? The Tesla trade, the bond trade, that stuff is part of a portfolio. It's stuff that we're actually doing live at TheoTrade. And the trade results that we're showing, it's perfect for part-timers. Again, selling premium, it's hands off. Like I just put on those QQQ positions, right? What do I do now? I don't know. Do I sit here and hope the QQQs go down? I don't care if they go down or not. I really don't. Okay. Like let them rally a little bit more. If they rally a little bit more, I'll probably do some more. Okay. 3 contracts is a nothing. Maybe I go out there and I fill a couple more. Look, still my heart. You're like, oh, he's losing. Look, the marketplace just rallied a bunch on me, right? I'm down 250, but still my heart. Okay. I can do tons of these things and I can actually reduce the risk. And it's easy to reduce the risk on these particular positions. Listen, even a fraction of your time is enough to see results, but you have to get the methodology down. Listen, the characteristics of selling premium, the attributes of selling high probability premium are undeniable. You're never going to have to buy or sell the stock. The risk is limited to precisely your comfort level. You don't need stop orders. You can vary time frames and minimize your risk. The probability is obviously extraordinarily high. It's a perfect strategy to enhance one's stock portfolio, right? How do you enhance your stock portfolio? You can actually learn to sell premium, massive amounts of premium against a portfolio, long or short. Much better than covered calls. The stuff people do in covered calls doesn't even make sense, okay? It's an excellent tool though for those seeking returns to build an account. Listen, building a portfolio of options, okay? Don't let the options portion of this intimidate you. Selling premium can be initially done for minimal credits and minimal risk. However, the sale of premium, okay, you got to understand, it's not just go out there and sell something and just go, yeehaw, I'm gonna make some money. This is the same thing as like using a massive power saw. You know, options could be the quickest, the fastest, the safest, the easiest way to get where you want to go in the marketplace. But if you do not know how to do this correctly, you will lop off a couple of fingers. And that's why I always say this about this. You got to learn, okay, to build the portfolio correctly. Like everybody can go out and they can Google what selling options is, but very few people are going to be able to Google what a VIX volatility spread is. And that's one of the defining factors is how to cut margin, how to reduce risk. Okay. All of those. Okay. All of those are factors. Listen, you can sell premium and minimize risk. Maybe you don't know options, maybe you have limited experience. Do not, again, let that part intimidate you. You're going to need these strategies for the foreseeable market future. We can show you how, and we can show you when to sell premium in a matter of a few hours. And what we do here at TheoTrade is create detailed recipes, okay, for every strategy, including selling premium. And you wouldn't bake a cake without a recipe, so why trade without one? Again, I kind of call it be prepared, not scared. This is what you need to know to successfully sell premium for a living. You got to know, first of all, what underlying stocks indices make the best premium selling candidates. What volatility should I seek out? I'm going to tell everybody right now, okay? And I'm deadly serious about this, okay? Do not use Tesla. I use Tesla as this example, okay, because I have 22 years, okay, of derivatives experience and market making experience and hedging experience. Tesla is out of bounds. So why did I show it? Because I wanted to show something that, and I'm serious about this, I wanted to show something that wasn't just wrong, okay? This is a stock that has absolutely tormented shorts. You just saw me sell naked calls in the beast, not just survive, to live to tell the story about it. And I'm telling you right now, I was dead wrong and still made profitability of like 70, 80, 90% on those trades. You got to know, though, the right volatility to seek out in this. And you don't want to get extreme. You got to know what options expiration to select. Pick the wrong expiration. Like, again, whenever I talk about selling options premieres, everybody's like, go short dated, short time frame, short time frame. You don't have to stress. I'll take the other side of that all day long. I just showed you an option 90 days out that within 30 days lost 66% of its value. So how can that possibly be? Because all options are not created equal. Options expiration and which one to select is critical, okay? What should be the delta of the option you sell? What's the delta? That's the probability, okay? It'll actually help you. What's the probability of the option you should sell, okay? What options do I buy against my positions? Like, what's the hedge supposed to be? How do I actually build the position? When I say how to build the position, I'm not talking about one or two options to sell, okay? You're going to go out there, okay? And you're going to build yourself a position. You're going to go out there and you're going to look at this and you go, I'm going to sell some stuff up here. I'm going to sell some stuff down here. But if we come crashing down here, I'm going to have me a VIX vol spread. I mean, and a partridge in a pear tree. You got to know how to build the whole position. This isn't about, I put on a trade, I took off a trade. I put on a trade, I take off a trade. We're actually going to teach you how to build a real position, okay? Do I need large amounts of capital in my account to do this? No. Listen, everybody realizes like large amounts of capital. Oh, that's wonderful. And everything's so much easier. Why? Okay. Today, different products, like I showed you, options on futures, they don't have a day trading margin rule. Options on futures, very minimal margin is tied up. Okay. The marketplace, again, it's leveled the playing field. It's just totally leveled the playing field. And it changes the nature of the business. That's why, 37 million option contracts traded yesterday. And yesterday was a quiet day in the marketplace. Everybody's caught on to this now. They all want to be there. Okay. We'll actually fine tune. What's the right amount of risk for me? That specifically means for you. Whether you have a $5,000 account or a $5 million account, we actually fine tune the right amount of risk for you. Okay. What are the percentage returns supposed to be? Meaning like, how much should I make when I'm selling premium? Okay. Let me show you what we do here at TheoTrade. We create recipes in trading. And when I say recipes in trading, literally checklists. Okay. Trading, it's all about answering the what ifs. It's what might be a good stock or ETF candidate for you to sell premium. What's the correct options expiration cycle to sell the options in, right? How much capital do I commit to generating premium? What strike price options do I sell? What strike price options do I buy? How can I limit my risk? That's what I was talking about, that VIX volatility spread. TheoTrade has your answers. Again, we build recipes, definitive criteria, checklists for each strategy and each unique variable. Whenever I say checklist, right, the logic of the checklist is the same as if you were going to be a pilot and fly a plane. You know, you hop into the cockpit, you know, you turn the key and take off. Not even close. You fly in a plane, whether it's commercial, private, or whether you're a pilot yourself, okay? Every pilot has highly detailed checklists. I mean, seriously, they have all these variables they go through to effectively make sure that, yeah, you're not going to fall out of the sky, right? That's what we actually build for premium selling. And that's what we build for every strategy in every unique variable. What if the market goes up? What if the market goes down? I mean, listen, trading, okay, and TheoTrade is the answer to your questions. I mean, trading is all about the what ifs, right? So what's the right probability for your trade? How many option contracts do I trade for the account size? When do you close your premium sell? What if the market sells off big? Do I bail out of the trade? What if we rally massively? Can I fix a losing trade? It's about how, it's about when, it's about why, it's about what price. I'm telling you though, it's just the beginning of the variables that you're going to face when selling options for a living. Listen, you can read about what selling premium is. And I say this to everybody, you can Google, like, I'm going to go out and sell some options. You can Google it. 10,000 different pages will come up. A lot of people probably already know even how to do this, to the sell premium. The sale of the premium is the easy part. It's the risk mitigation. Okay. What you need for that, it's TheoTrade's recipe for success. Of 20 plus years of trading experience, access to client order flow for 15 years. That's just me. And we viewed and studied millions of trading accounts. I mean, I ran education, okay, for 15 years at a firm with the largest options order flow in the industry. I'm telling you, on the retail side, we know what works and what works in terms of hedging, and we know what works in terms of premium sale. Criteria, people, is your recipe for success. The following strategy, which is selling premium, okay, and the corresponding criteria requires the utmost attention to detail. I've spent years fine-tuning, okay, the sale of premium, the criteria behind what to sell, the criteria behind the VIX volatility spread to use, okay? And when you approach the section on criteria, you follow the steps to build a trade, okay? We have a full-blown 4-hour course called Selling Options for a Living, okay? It's a 4-hour course. It is available immediately. So you can actually download the slide deck. I'm going to tell you right now, it's an intense 4-hour course. And we get you ramped up. If you have no options experience, we get you ramped up before the course. And we tell you that right off the bat. And by the way, the course is archived, but we also give you download capability for this course. And we even have a mobile application for both iOS and Android. So if you can't necessarily watch the course, online, you download the course onto your mobile device and watch it off of an iPad, okay, in one of your Android tablets. It's fine, okay? And again, it's a 4-hour course, but we don't just stop there. And I want everybody to know right now, okay, we have a couple of bonuses with this particular course. In fact, before I go any further, I'm going to tell you right now, what we do here at TheoTrade differentiates us from really any other education firm out there. We do not just sell a course and give you a pat on the back and say, go for it, man, go sell some options for a living, because it ain't gonna work. We do not do that, right? What a lot of education firms, and again, I've been in this business long enough to know that every firm goes out there and what do? They sell a class for $500. And they sell an indicator that goes with the class. Before you know it, they have another class because you needed another class to learn to use the indicator and the indicator that goes with the initial class. But then there's another class. We don't do that. I'm going to tell you right off the bat, okay? What we do here at TheoTrade is all encompassing, okay? We provide you everything that you're going to need, all right, to sell options for a living. We're going to give you everything you need. When I say everything you need, we'll actually even blast out trades to you. We'll let you see our portfolio. When I say we'll let you see the portfolio, just hang with me for a moment. In fact, you know what? I'll even bring it up right now, okay? Here's actually one of the portfolios, okay? This is every trade that I've actually popped on. You just follow it. All the contract sizes are in here. Look, this is the VIX volatility hedges in here. Iron Condor is actually in there. That's a buy side Iron Condor to mitigate risk. I even showed a Tesla trade in here, right? All of them, opening trades, closed trades, it's all in there, okay? Why? Okay, because it's the only thing to do. And when I say it's the only thing, it's to that in a moment. You can even email us and bounce trade ideas off of any of us. There's 8 full-time instructors here, okay? But we give you, when I say everything, every course, every granular detail of being able to do this. So hang with me for a second, because I'm going to show you a couple of the bonuses that go with selling options for a living, okay? And kind of give you the full explanation of TheoTrade. Here is the curriculum for selling options premium for a living class, some of the key points. So you're going to obviously learn to generate consistent returns, okay, with selling options. And you're going to learn the logic behind selling premium, okay, and why to understand these trades are going to work right now, how to build an options inventory, okay, so you can spread out your risk, multiple timelines, professional trader's guide to capital allocation. There's an entire section of the course in capital allocation, okay. You're going to learn a little bit about the Greeks to reduce risk, and they're going to be totally demystified. So you know how to actually use the Greeks in context of your trade, how to maximize returns, minimize risk. The key, okay, to all long-term traders is risk management. If you understand how to manage your risk, you're going to thrive in the marketplace, and that's one of the key components of the class. And how to minimize your risk and maximize returns like never before. We're going to give you some insights beyond any class that you've seen anywhere. And again, that's just part of the curriculum over here. And I wanted to throw that at you because this is a fairly, again, it's intense. But if you want to be able to go out there and sell options premium, you want to be able to do it for a living, okay, you're going to have a degree of that intensity. And you're going to have to go through this 4-hour course and learn these tactics. Listen, you want a bonus. As I said a moment ago, what we do here at TheoTrade, it just goes beyond one class or one indicator. Like, we get it. People want everything to trade. They want everything to be able to invest. They want it at one place and they want it at one price. The first bonus that we offer, it's really simple. We give you access to everything that we've done, okay, in the previous 5 years. So here at TheoTrade, the first bonus we offer, okay, we give you access to 98 trading classes today. Now, it's access to over $9,000 in classes. So we give access to the Sell Options Premium for a Living class. But I'm going to tell you right now, selling options premium for a living class is incredible. But guess what? This volatility back spreads class, okay, it's a great hedge for it. Right here, the risk twist spread class, one of the most prolific classes we ever have done. It's a great hedge for selling premium, okay? How to collect income being short, day trading, I mean, iron condors, all of these, you get access to them. And then people look at this and they initially go, oh, it's a little overwhelming. It's 98 classes. Listen, would you rather be overwhelmed or underwhelmed? We just give you access to everything because we don't think it's right. We don't think it's right that people get nickel and dime. They go out and they spend $500 for a class and they have to spend another $500 for another class. We just give you every class. Okay. There's no if, and, or but about it. And by the way, if you're brand new, everybody goes, I'm brand new. I don't even know where to start. How about this? On the site, we actually have a menu. You know what it says right there? It says start here. Why is this start here? Okay. Go ahead and click it. We'll open it up in a new tab. Okay. You have to have some place to start. Options 101, right? Options 201, options 301. Here we go. Preparing your trading day, order execution, getting your risk under wraps, what products to watch. I mean, it's all in here. This is to get you ramped up before you ever even go into the class archives, right? But again, there are 98 classes. And you can go out, you can look at every class from every other educator. Nothing even comes close to what we do here at TheoTrade at any price. I don't care if you go out and spend $30,000 on education. It's not even going to touch what we're doing over here And you'll see our TheoTrade instructors, well, right now, okay? Here are the instructors, 8 full-time instructors. Jeff Bierman. Jeff Bierman's also a professor of finance at DePaul and Loyola. So he actually moonlights with us here at TheoTrade. Jeff also worked as the former chief market technician for TD Ameritrade. Jeff's also run money. He ran part of a hedge fund all the way back in the 90s, analyst, okay, and also CMT. So Jeff is actually, as I said, he's a professor of finance. He actually heads a lot of our continuing education here at TheoTrade. Next in the docket, Matt Williamson. Matt Williamson is much of our quantitative strategist. He's market neutral. He's also a premium selling option strategist. This is your guy that's, when I say quantitative, spreadsheets, okay, very mathematically inclined individual that will work with people in terms of market neutral strategies. He does not take direction. Next on the list, Corey Rosenblum. Corey Rosenblum is also our CMT. So we actually have 3 CMTs on our crew. If you know anything about the CMT designation, it's incredibly hard designation to get. Okay, Jeff Bierman, Corey Rosenblum, and Brandon Chapman. There's actually 3 CMTs. Corey's our what? He's our resident swing trader and our senior strategist. And we have Brandon Chapman, macroeconomics, technicals, and fundamentals. Brandon also worked with us at TD Ameritrade. So we actually had Jeff Bierman at Thinkorswim TD Ameritrade, Brandon Chapman, Thinkorswim TD Ameritrade. Then we come to Steve Miller. Steve Miller, stock options and futures trader, but Steve is also our in-house trading psychologist. If you need it, we have full-blown courses on trading psychology. There is no one better in this business than Steve Miller, and I'm serious about that. There is one course on trading psychology. It'll change your whole life in there. It's part of the 98 courses, no extra charge for it. So I just suggest that everybody watch that. It's the 5 essential building blocks. I'm serious, write that down. It's the 5 essential building blocks to successful trading. I'll even show you where it is. Okay, and I'm dead serious, not my class. There's nothing better. I mean, that thing changed. I was trading for 20 years before I actually watched this class. Totally changed my life in terms of how I actually approach trade. Tony Rago, he's our intraday strategist. Tony actually just trades throughout the course of the day. I mean, he just calls out setups all day long, okay? Then Blake Young. Blake Young is our newest, I call it acquisition here. Blake is also from Thinkorswim and TD Ameritrade. He's an expert in market profile, futures, currency, and commodity trader. I mean, we have, again, everybody on our crew has their own genre of trade. Like, I'm not one of these believers. You can only sell this. You can only do this. Listen, Tony only trades NASDAQ futures. He doesn't even trade any options. Okay. Blake Young, okay, trades, again, a lot of currency, a lot of futures, commodities trader. Corey trades quite a bit of futures in here. Brandon, smattering of everything. Steve Miller, everything. Matt Williamson, options super geek. Jeff Bierman, he's our chart extraordinaire. Again, everybody has their own genre. In fact, here's a picture of us all recently. This is us. This is instead of getting together in the office, this is the best we can do these days, people. This is again on a Zoom meeting. Bonus number 2, we give you 3 months unlimited access to TheoStream. Okay, and what TheoStream is, it's a live trading chat room. We broadcast live 6 hours a day. Here, really quick, let me show you. Okay, this is it. It's live right now. In fact, I'm even going to hit refresh. Okay.
I'm going to do it.
So this is live.
And we might
and
get
you're
in
actually
trouble.
seeing, I'm going to mute it. You're actually seeing, and you heard a moment ago, this is Tony Rago. This is Tony Rago. He's trading futures contracts live right now. Look, he's actually working, right? NASDAQ futures contracts. All he does is call setup all day long. This is the actual chat room. Now, okay, in a given day, there are thousands of people through this chat room, literally thousands of people through the chat room in the course of a day. All right, onward and upward from there. I'll show you a little bit about that again in a moment. We give you 3 months access to that chat room. We broadcast live 6 hours a day. Each of the instructors takes about an hour segment per day. I do a minimum of an hour a day. We provide real-time trade ideas, real-time market insights and analysis. You get to see everything. We also do text and push notification of trade ideas. There are 5 different trading portfolios. We have daily coaching sessions, timely topics. And this is one that I put a huge amount of weight into, and I'm just going to detail it right now. The instructors directly answer your trade-related questions via email. All right. It's an additional, and by the way, you can actually ask real trading questions. Email us, right? Most of us come from the brokerage industry. Most of us come from a professional trading background. We are more than capable of answering direct trade related questions. We're giving you another access to another $1,000 support trades and insight. Again, Not everybody can watch everything all day long. It's all recorded, but we do broadcast for 6.5 hours actually of every single trading session. And you get access for that 3 months. In addition to this, we give you access to 59 proprietary indicators and scans. So from like day one, we give you everything. Auto expected move. In a minute, I provided this to you. We will give you the link, okay, to the SPX expected move. We give you every indicator as you enroll today. We're going to give you every indicator. I mean, literally everything that we use. And we do this because, well, first of all, it's the only right thing to do. I use the auto expected move all the time. I use gravity points. I use the RSI Laguerre. I use Quantix every single day. It's wrong. Like, how can I use it and not actually hand it to our clientele? We use it. You should too. It's access to another, $1,800 plus in indicators and scans. And now the third bonus. The third bonus, this is brand new. We just opened up a Theo Theta portfolio. And this goes hand in hand with the premium selling course that we just discussed. Okay. It is brand new. It is a new positive theta portfolio. It goes no holds barred trading, okay, approach. You can see everything that I do, literally everything. It's total full disclosure on all trades, opening and closing, hedging positions. Listen, you're watching me trade and discuss positions literally like never before. And when I say this, I mean, we actually give you access today, now, okay, to this. It's the Theo Theta portfolio, view every trade. Now, we have other portfolios we've never actually run. This is running much more like a hedge fund, okay, where I'm actually opening trades, closing trades, and you get to see like the running tabulation. So you can hop in anytime. You don't have to do all the trades. You can kind of pick and choose through here. So there's a lot going through. You're like, oh, what do I do? Okay, it's what you're comfortable doing. And again, all of this. And in addition to that, we actually do a weekly premium selling update. Like, we'll actually give you a weekly video that talks specifically about, well, some of the trades that I did throughout the course of the week, right? So it actually is a video you can watch and take you through. Here, what our members are saying. This actually comes from Ken. Woohoo! Thank you, Dom. I'm never sure of the trades that are new to me that I structure myself. This is great to hear. Not to brag, but this is due to you and your magnificent team. I'm up 1.67 million in profit. Yes, I'm going to pull a big hunk of that out. My wife's account, yada, yada. Okay, listen, I just wanted to let you know how the trade goes. I'll check the chart. Thank you again. It's from the Ken family over here. Listen, TheoTrade includes everything that you're going to need to invest in trade. We do classes, we do coaching, we do email access to the instructors. We have a live trading room, live trades, indicator scans. It's everything that you're going to need to succeed. I mean, what we built here is the Netflix for traders. Every genre of trade, you name a genre, you name a class, we have it. There's 98 classes, everything from pairs trading to options to selling premium for a living. Today, it's $297 for 3 months. Okay. And I want to clarify something right up front. It's $297. This is not a membership. This is not an introductory price. We don't do that. Okay. We don't do something like the gym membership that you can never get out of. Listen, okay. Today, it's $297 for 3 months. That's it. If you go to theotrade.com/theta, that's T as in Tom, H as in Henry, E as in Echo, T as in Tom, A as in Apple, theotrade.com/theta, you can enroll for it. It includes the selling options for a living class. It includes access to over 98 trading classes in total. We will still have new monthly classes. We have a live trading chat room where we broadcast 6.5 hours a day. We give you every indicator and scan. We have text and push notification, different trade ideas in 5 separate portfolios. We have daily coaching sessions and timely topics, and you can email us for support. Okay. It's, again, kind of all encompassing. And I want to reiterate something. After 3 months, okay, what do? If you want to do this again after the initial 3 months, it's $297. You know, I talked about this a little bit earlier, but I said at TheoTrade right now, we have about 6,000 clients. And why I have 6,000 clients? Because it's right by people. We don't do this like crazy memberships and the gym membership where you can't get out. It's $297. It's not introductory price. You want to do it again? You tell us. It's $297. You want to do it again after that? That's up to you. Okay. If you want to follow our portfolios forever, it's fine. Okay. But all the classes, everything is in there for you to see. Okay. One last aspect. We'll make this a completely riskless trade. It's everything that you're going to need to start trading from novice to expert. When I say from novice to expert, again, we have classes, as I said, from the options 101 all the way to the most complex, selling premium, managing risk, right? There's a money back guarantee. Listen, trade with us. Just come trade with us for the next 3 months. If you're not satisfied, and we don't put I don't think we put anything around like what satisfied happens to mean. If you're not satisfied, just email support@theotrade.com, provide us the details of your trades, and receive a full refund. And again, I'll give you the stipulations in here, but listen, it's only $297. Like, we don't make a big deal about this. We want people at TheoTrade that want to be at TheoTrade. The only stipulations we have, you got to do 10 trades using any of the TheoTrade criteria in the next 3 months. 10 trades, okay, in the next 3 months. I think that's easy enough. Why do we do that? Because we don't want people, okay, coming here, grabbing all of our criteria, recording all of our classes, listening to everything, okay, and then go, give me your $297 back. Got to make it fair, all right? To level the playing field, do 10 trades. Trade with us. The initial account value has to be $2,000. You have to follow our criteria. By the way, that's the second time I said that. Look, 10 trades using our criteria, not your criteria. You have to follow the TheoTrade criteria, and they have to be real trades. This ain't paper trading, people. So if you're willing to trade with us for the next 3 months, spend 3 months. If you're not happy, okay, in any way, shape, or form. By the way, as I said, we don't get into what's satisfied. Just email us. You don't have to call us. You don't have to do a little dance. Okay, make a little love, get down tonight. I've had gym memberships where you have to actually, I think, give blood to be able to get out of the gym membership. Just email us. Email us. We'll give you $297 back if you're not satisfied. Listen, get into TheoTrade now. There are 30 riskless spots available. And the reason we only do 30 riskless spots, obviously to incentivize you to enroll, but I can't go through 10 trades for more than about 30 people. It's insane. Okay. Listen, we work with our clientele directly. So we give you unlimited email mentoring. Send us your trades. And again, the $297 riskless offer, it's never been available before with selling options for a living. Plus, we now have the Theo Theta portfolio. Okay. The Theo Theta portfolio it's brand new. It's just brand new. We just kicked it off, at the beginning of the year, and it's the first time we've actually gone what I kind of term the full Monty. I want to show you everything that we're going to do. So again, it's completely riskless offer. As I said, go to theotrade.com/theta. Again, it's sell options for a living class. It includes 3 months access to everything that we do, 3 months access to 98 classes, and the Theo Theta portfolio. It's live trading with me. I'm going to answer a couple of questions. I also want to bring this up because I've seen a few questions already pop in over here. So hang with me here for just a moment, and I will answer a lot of the questions in here. Okay. So it's theotrade.com/theta, and I want to take you briefly to that site. And here it is. Again, sell premium and minimize risk course, theotrade.com/theta. The reason I want to bring you to this class, okay, is for this. As you actually go down here, it's 3 months, okay, of access to on-demand recordings. It includes, of course, the new Theo Theta portfolio. When you click add to cart, right? Few points to be made really quick. As you click add to cart, it's $297, okay? As you go down here, it is a single payment, and this is exactly why I'm bringing it up here, okay? It is a single payment. It is a one-time, it's not a membership. I'll always stress that to people because I personally do not like memberships. And I think that a lot of people do that. And again, I don't love it. $297. By the way, you could also do 2 payments of $149. It's up to you. And the other thing I wanted to show you on here, okay, and this is important, as you actually scroll up just a little bit, okay, in the enrollment form, as you're filling this out right here, put your phone number, because the phone number is for, it's for text messaging, okay? If you don't want text messaging, you can actually download the TheoTrade app, and it's found in the App Store. The TheoTrade app is found in the App Store, and we can do what's called push notification. So if you're overseas and you're like, I can't get text messages, okay, we actually have push notification as well. So we had to build it two different ways. And again, it gives you, complete access to everything that we do. And it's important that you know that. And again, we're constantly firing out trades in here. Everything's available to you. So again, it's somebody else asked over here. It's TheoTrade.com/theta. One other aspect towards the bottom of this page, okay? It's the SPX expected move indicator for Thinkorswim. For those of you, as you're enrolling, you don't have to worry about downloading that indicator. We have all the indicators on our site. So I'm actually going to jump through now, and I am going to answer a couple of questions over here. By the way, I love that one. Do the VIX or the VXX. I'm going to cover that one in a moment. You know what? I'm going to get some generalized questions, then I'll get really, really specific in here. So, oh, you know what? Somebody also asked me, can you take a look again at the site? So this is TheoTrade. This is the actual where we're broadcasting, and this is Tony's screen here. I'll make it live. So it's Tony's screen live. You can see right now he's actually long one futures contract. As I said, you get to see everything that we do. And this guy trades intraday. This is not for everybody. You find there's 8 different instructors. Everybody finds somebody that they kind of like adhere to a little bit. And again, that's why we kind of focus on all genres of trade. So that's what the broadcast room looks like. And then of course you can communicate with everybody else in here. And by the way, there's news being posted through here throughout the course of the day. Tony's in here actually firing off trades. All of the instructors have highlighted, okay? So they're highlighted in here, so just be aware of that. When I say highlighted, you can actually see, okay, their trades separately from everybody else. All right, the next thing I wanted to show in here, what's the class archive look like? We have option classes, option newbie classes, technical analysis, day trading, trend trading, hedging strategies, bonds and futures classes, stock classes, pairs trading, mindset. Earlier I said to you, and I'm serious about this, okay? Every person that comes through TheoTrade should watch the 5 essential building blocks to successful trading. That class, okay, easily, I mean, you talk about $297. I'm telling you, it'll change your whole entire change your whole outlook on markets, but it'll change your whole outlook on taking risk, right? No one has been through more risk than Steve Miller. And I'm serious about that. I don't care how much you think your portfolio is worth. Steve Miller started trading on the floor, okay, in 1974. Before there were options, he was actually trading on the floor of the Board of Trade. And I'm telling you, you will learn more about risk management from this guy in 5 essential building blocks. It's how to actually approach your trading. It's under, and I'm just going to throw it out there, okay? It's under mindset and trading. So after you enroll, seriously, you watch my classes and learn how to sell premium, watch his class on mindset. Again, changed everything I've ever done in this business. And I like to say that. It was like one of the first people I'm like, we gotta hire that guy. He's awesome. Option strategies, by the way, I've also known Steve Miller since I'm a kid, literally since I'm a kid. So sell premium, minimize risk class, okay? And here is the full gamut of classes that we offer. This is just option strategies, tracking options activity, gamma irons, controlling risk, back spreads, volatility crash course. This volatility crash course teaches the VIX volatility spread, selling options for a living. People want to know what the classes look like. It's what they look like. Theo Theta portfolio, okay? Opening trades, closing trades, it's all available to you, okay? Literally, you get to see the full gamut, right? The start here menu, and everything in here is searchable. So you can come in here and say any trading topic you want, type something in. There's demonstrations of how to do everything on here as well, right? So that's obviously live right now. So again, go right now. We're here to help you. We can also answer your questions in here, but I'm going to answer some general questions. It's theotrade.com/theta. By the way, somebody asked again, it's only $297. Okay. We do that again because we are about volume. We have 6,000 clients right now on TheoTrade. That's fine for us. And you can email us anytime for support. And I'm telling you, we'll get back to you, and we'll get back to you quickly. All right, let me actually bounce to some regular questions in here. By the way, what our members are saying, this one came in September, and I love this one. It came in from this guy, Steve. Your organization continues to blow me away with its insights, expertise, resources, personalities, and structure. I've learned so much and have been able to apply the knowledge to improve my trading exponentially. Thank you. And thanks to all your staff for everything. I'm grateful I found TheoTrade and grateful I had a sense to choose your organization as my mentor over all the other players in the marketplace. And now you've added Blake Young. Blake is one of our newest people, okay, whose style I enjoy immensely and I'm starting to adopt, okay? Don't know what else to say except that TheoTrade is awesome. Very satisfied customer, Steve from Southern California. Again, it's TheoTrade.com/theta. Let me jump to answer some general questions now. Again, and I'm hopping over a couple more. There's some wonderful comments about TheoTrade in here, but I think it's important to answer your questions. So again, somebody asked about the riskless trade. It's riskless trade. Okay, for the first 30 people. Okay, as you enroll, again, for the first 30 people, as you enroll, I will even read off your names to confirm that you are enrolled. Okay, under what we kind of call our riskless trade. So here's a couple general questions, and then I'm going to get to your specific questions. So general questions first. Everybody asks, what do you need to get started? What do you need to get started? We have everything you're going to need. You can even do this now. I always say, oh, you need a laptop, you need internet connection. You don't even need a laptop anymore. Tablet, you can trade off the tablet. And it's actually pretty good now to trade off of the tablet. That's one of the first things. We have everything you're going to need from absolute novice to some of the most extreme traders. Second part, this is not a membership. We do not auto renew. We do not auto bill. Okay. If you don't want to do it after 3 months, that's fine. All right. Like I get it. And I stress that so many times because it's only $297 for 3 months. It's what's right. It's just the right thing to do for people. And that's why we do it. All right. Number 3, there are now weekly video updates. You can follow all the moves we make. So we do these videos. I do the videos every Friday morning, and I tell you, like, this is what we're doing. This is why we did it. So, and you're not just seeing the trades. You're seeing me talk about the trades in these weekly update videos. But I also do the trades live every morning. But maybe you can't tune in the morning. Maybe you're going to work. Okay. Even if you're working from home, maybe you can't listen. It's okay. We update you on everything. We also, number 4, we archive everything. So we understand that not everybody can watch live trading. Interesting irony is a lot of people are watching right now because they're working from home. But you know what? On number 4 over here, seriously, we archive everything. Everything. Number 5, we'll give you access to TheoTrade Mobile. You can download archives and view at your leisure. By the way, you can actually watch the archives at like 2 times the speed. So an hour takes you like a half hour. So we have variable speed archives in there. Number 6, add your cell phone number when enrolling. Okay. Add your cell phone number when enrolling. Why? Because we want to be able to send you, we want to be able to send you text messages. All right. Next, number 7, you can email us anytime. Email us anytime. Oh, well, receive a response within 24 hours. Now, the reason I'm throwing this out here is, and this also is important that you guys see this. Okay. So email us. You got to give us 24 hours. And the reason I say that is we literally have people sometimes are like, it's a Friday afternoon. There's 20 minutes to go to the cash close. The markets are moving huge. You're like, help me. I'm like, come on, be fair. Okay. There are 6,000 clients. It takes us about 24 hours. Listen, I answer the emails early in the morning. So I am on Atlantic time, which means I'm an hour past the East Coast. So right now it's actually almost 4 o'clock, because it's 4 o'clock here. So I answer my emails in the morning from about 7 to about 10 in the morning is when I answer the emails. And I spend 3-4 hours a day easy on emails. Email us. Okay. And the reason I stress email us, you're paying $297. Okay. And you get access to myself and all the other instructors here at TheoTrade. Okay. That alone is worth $297. And it is. And everybody here says that. You're going to gain access to every course that we've done. It's now over 5 years, okay? Including classes, coaching, live trading sessions, everything's searchable, right? All the trades can be done inside of an IRA retirement account with as little as $2,000. At TheoTrade, if you're worried about your broker, everybody says, they won't let me do anything. We can help you get approved for options at several major brokerage firms. And I'll tell you what, some of the brokerage firms, they're really like, we don't even want you to trade options here. Good. We have brokerage firms that do want your business. Remember, there are 30 riskless trade spots available. The first 30 people to enroll, it's completely riskless. There's a money back guarantee on the $297. Again, there's just no risk to it. So get results, take action, enroll for it. Again, it's theotrade.com/theta. I'm going to answer now some of the questions that came up while live that I did not get while live. So let's jump to it. I like this. Somebody said, I have a margin account with TD Ameritrade and use Thinkorswim. Can you explain the best way to calculate the profit percent of a put spread? So if you look at a put spread, I'll just give a quick example. If you sell, okay, a $5 wide spread, and you sell a $5 wide spread for a $1, okay, credit, $1 credit, what's the most you can possibly make? So what's the most you can possibly make? If you sell something for $1, the most you can possibly make is $1. So to figure out actual like percentages on here, people like, how much should I gain? It's all about the dollar credit. So if you collect the full dollar, you're like, well, you can say I actually made 100% on that particular trade. If you only collected 50 cents, okay, and this is where people get thrown. If you only collect 50 cents of that dollar, okay, if you collect 50 cents of the dollar, well, you made 50% on there. So okay, what can you lose? I mean, theoretically, though, on that trade, you're like, I could lose $4. And that's one of the keys here is we teach you how to circumnavigate some of that $4 of risk. Sooner or later, risk comes. And when risk comes, the way to make money is not to lose the $4. Hopefully that makes degrees of sense. Go into much more detail in an email if you need it. So, all right, onward and upward here. Okay. Somebody said, do you have daily 1 hour trading on selling premium? Okay. So, Simon, every day I mention the portfolio, you will not need an hour a day on selling premium. We probably do provide much more than that because, I mean, literally we're broadcasting for 6.5 hours a day. But when I come on and I actually talk on a day-to-day basis, every day now I'm talking about the sell premium portfolio, but frankly, there's nothing to discuss for an hour. 5-10 minutes. This is what I did yesterday. Once you understand the logic, this is what I did yesterday. This is what I'm going to do today, yada, yada, yada. This is how much risk we have. Move forward. Let me just show you the actual positions, and that's it. So it's actually a lot easier than you think. I love that question, though. Okay, please say and show how much buying power and margin on this type of strategy. So actually, I did grab that one throughout the course. So we can reduce your buying power to what you need it to be. So if you tell me that, Don, I'm coming to you with a $5,000 account, I'm going to tell you precisely what product, okay, you should invest your time in and your money, right? If you tell me I'm coming to you with a $500,000 account, I'm going to tell you what kind of account to set up. You should not use a regular margin account with a $500,000. You should probably be using a portfolio margin account. Somebody says I have a $20,000 account, but I'm very risk averse. Okay, that margin and risk is a very, very personal thing. And we have a great way here and methodology of going through, especially in the class, to help you actually assess and to kind of tailor the portfolio for you. It's one thing I've learned over the years. Everybody sees risk vastly differently. And that's actually why I even talk about when I say, risk is so different. That's why I actually was talking about like Steve Miller and that class with the 5 essential building blocks to trading, because he goes through points about yourself that you maybe have never really exploited, but it'll actually teach you a tremendous amount about how much risk you really want to take in there. Okay. Oh, I love this. Somebody said, how many of those can you do for 100,000 portfolio? In a $100,000 portfolio, this came from Greg. Man, you could trade a lot. Okay. Sure. My one of my accounts is going off over here for a fill. Listen, Greg, you could do a ton of trades in a $100,000 portfolio. It's not even like how many you can do. It's how many do you want to do? Because the more you do is obviously the more risk you're going to be evolving into. So you can do options on futures. Wow, you'd be amazed. Even a $100,000 portfolio, okay, you could have some massive, massive positions in there. And that's going to be deciding factors, how much risk you want to take. Oh, somebody said, what if the stock is hard to borrow? So, and you get assigned. We teach you how to avoid assignment, okay? But getting assigned is not the end of the world, right? That you're going to actually learn that assignment and the strategies that we use is when I say not the end of the world, most of the time, if assignment comes, it's something that you actually wanted, okay? Because we teach you literally what to look for and what to actually, like, you'll know if you're going to be assigned well before, okay? Well before you're ever assigned. And I stress that to everybody here, that assignment only comes to those that were not necessarily ready for it, okay? All right. I think we got almost all. Oh, a couple of names that are popping in here. Okay. By the way, you know what? If you only have $5,000, it's fine. Here, you know what? I think of this, and again, I'm going to read off a bunch of names to you guys in a second here. But somebody said, like, yeah, I only have $5,000. Here, this product. First of all, circumnavigates. There's no day trading margin rule on here, right? This product is everything you're going to need. So it's the MES. And just to make a quick point, I'm going to go 65 days out. And I'm just going to show you the margin in here. And again, I'm not going to tell you this is going to be the end all be all. It's a newer product. And what I want to show you in here is that with a $5,000 account, okay, this will tie up $600 in margin. And you go, it's still tying up a little bit. It's $600 in margin, okay? But you can even mitigate your risk and exposure even more. So you can sell this, okay, for instance, and turn around, buy these. And again, now we're only going to tie up about $400 in margin. There's always ways, okay, to continue to kind of circumnavigate so many of the margin requirements. And again, with a $5,000 account, maybe you don't want to sell options naked at all. Maybe with a $5,000 account, you go into the spiders and you use what's called an iron condor. A few of the names, and then I'm going to actually read some more questions. Here are the names. These are those that have actually enrolled now and have qualified for the riskless trade. Richard L. from New Hampshire, Neela P. from North Carolina, Justin G. from Georgia, Nat M. from Canada, Sean D. from Georgia, John H. from Texas, Ron T. from Texas, Chester D. from Louisiana, Eva W. from Ohio, Richard M. from Arkansas, Don H. from Pennsylvania, and Roger B. from Indiana. Now it takes about, okay, it takes about 5 to about 8 minutes for me to finally see who's kind of come through. That's about the first, 12 names or so I've read off. There's still a bunch more in the system because I can actually see them coming through. I don't have the names yet. Those individuals, again, have now qualified for the completely riskless trade. So right off the bat, there's anywhere from, about 15 to 17 spots left. By all means, enroll for it. Again, it's, and I should probably throw the address up there. It's theotrade.com/theta. Lisa was asking, any reason to do the VIX versus the VXX? The VIX is actually the more appropriate product, Lisa, for a hedge. The VIX is actually the cleanest, the safest, the easiest way to reduce risk in the S&Ps. So with most respects, the VIX is a much more efficient product than the VXX. It's kind of what I was getting at with that one. You know what? Somebody was actually talking about, like on a weekly basis. So how much you can make on a weekly basis is a direct function of how much risk, okay, that you're going to put on. And it's actually something we go through literally in the Sell, okay, Premium for a Living course. I think that's actually a kind of a fair assessment over there. By the way, yeah, you can sell short now inside of an IRA. A lot of people aren't aware of this. If you so choose, you can even sell calls naked inside of an IRA here at Tastyworks. Literally, you can sell calls naked in an IRA now at Tastyworks. It's fair game. It's kind of cool, isn't it? Huh? So this is an IRA that I have here at Tastyworks. And I can actually tee this up a little bit for you, but go like 93 days out. And I'll show you the margin here is, it's not necessarily light, but you can actually come in here and you can tee up the sale of naked calls, even in an IRA. It's not restricted. Most people think that, that's a restricted trade. It's absolutely not a restricted trade in there. So, all right, I think I got most of them. Okay. Yeah, by the way, if you are in Europe, you will probably receive the push notifications through a mobile trading application. So, and again, the last question in here, the subscription rate after the first 3 months, it's still $297. That was not an initial fee of any kind. Okay. You do not need to use the Thinkorswim platform. So I actually use Tastyworks and Thinkorswim kind of interchangeably. So like Thinkorswim, listen, I grew up on Thinkorswim, so I'm comfortable like showing it, especially because like it's still like one of the most prolific platforms out there. And Tasty is a little bit newer, but Tasty is by far and away, it's like the up and coming platform. With that, again, we are here to answer some questions. A couple names are popping into the chat. We're here to answer questions for a few more minutes. It's Joe W. from Canada, Ronald M. from Washington, Donald B. from New York. Again, I want to thank each and every one of you that not only attended today, those of you that signed up. You can hop in the chat room, okay? Even before today's close, Corey Rosenblum is live right now. By the way, Robert C. from Florida, there's a bunch of names that are still piling in there. We have a handful of riskless, okay, spots left here on today's session. Again, I want to thank everybody for coming out. You can hop right into the chat room. I will be live tomorrow morning, okay, about 10 minutes before the bell. We start at 6:20 Pacific, 9:20 Eastern time. Thanks everybody for joining us here at TheoTrade. Have a wonderful evening. Bye-bye.